as big and covering the entirety of various categories as we are, we see the extremely mixed reaction to consumer spending. It literally is all over the map. Obviously, ticketing and travel don't exist, but your family is among a very, very large group of people who has purchased some form of home fitness equipment, from Peloton to Mirror to Tonal. It's about 163% growth in this category against our own internal baseline forecasts. So the other area that's just exploding are things that make your home cleaner and tidier. For example, customers like Molecule, Dyson, iRobot, all these are Affirm merchants as well. They're seeing massive increases, almost to double. Kitchen supplies are up a lot. People are trying to make their suddenly a lot more home cooking frequency more comfortable, more fun, everything from grills to blenders. I can keep going, but those are the categories that are winning. And then, of course, no one wears pants on Zoom anymore. And so fashion is down a bit, and so on.
What about the consumers themselves, Max? There's been debate over the last couple of weeks whether credit card payments should be suspended and covered one way or another by government help. But are you finding your consumers, I guess it's not, well, it definitely isn't credit cards per se, the payments that you offer, but are you finding consumers coming to you asking for some kind of flexibility in terms of repayments?
We've always taken the side of the consumer from inception. In fact, the company was founded on this notion that we will do right by the customer in good times and bad. For example, we've never charged fees of any kind, not even late fees. And so in many cases, we're seeing our customers coming to us to say, hey, thank you for treating me the way we should be treated now. And by the way, you've done it all your existence of the company. That said, there's definitely very, very real impact among those that have been furloughed or laid off. And we're seeing folks contacting us and asking if we will work with them on helping them repay on different timelines, or help them find a way to settle their bill somehow a little bit more comfortably. And of course, we've set up our own center to help folks both online and on the phones, and are doing this. I would say I think most responsible companies are either doing it already or should be doing it. And so I think we're not unique in that sense. But yeah, of course, we're seeing the fallout of the layoffs.
And Max, we've certainly seen lots of banks extend flexibility to their customers. Clearly, you were already doing that. As you said, you want to stand by your customers. Would you be against government-mandated flexibility for credit card customers? I mean, clearly, credit card companies are your rivals in the long term. Do you think it should be a bit more free market operating in this current environment, or would you support that if it came about from the government?
I'm hardly an economist, and certainly at best an armchair one. I think free market is always a better solution for a majority of problems, except in truly unprecedented times, and that's where we are today. So long as the playing field is leveled and credit card providers and other bank and non-bank lenders are not disadvantaged against each other, I think that is the new normal. And fundamentally, the mission is to help consumers survive and hopefully thrive through this pandemic. So long as the government doles out their stimuli and their help evenly, it makes a lot of sense. If it disadvantages some of the market players against each other, I think that's where you sort of push too far away from the free market economy.
Yeah, and Max, as somebody who's been both a serial entrepreneur and an investor, I just want to get your read on the startup landscape more broadly right now, and what we're seeing in terms of venture capital and money that's flowing or perhaps not flowing into some of these new companies, and whether you think that is a situation that is going to be here to stay for a while, if there's a reckoning, or whether it is temporary.
Again, it's really stratified. I think this is the very best time to be either a late-stage, well-funded startup because the competition is thinner. Those that were caught really capitalized are probably scrambling to survive while you can try to take market share, and that's where we're lucky to count ourselves. On the other hand, it's even better, perhaps. This is the time to hunker down, go 10,000 feet below ground and build something truly amazing. You can be sure that not that many people are dreaming huge because so many are just trying to survive. And so if you can get yourself in front of a great idea and inspired and hopefully venture funded, that this is the greatest time to start a company. it's the mid-market, sort of the Series B unprofitable startups, where every investor has to make a decision: do I keep throwing good money after what could go bad, or do I back out? And so I think that's where the situation is the toughest. By contrast, incidentally, we're seeing at Affirm amazing growth in the mid-market merchants. All the merchants that were digitally native, vertically integrated, the ones that primarily sell online, ship directly to your door, et cetera, they're thriving. You can see massive growth, not just their volume, but also the way they're coming to us asking Affirm to help them sell more things. Meanwhile, the really tiny ones are suffering, as the very large ones are also trying to figure out how to make sure that their logistics remain at least half functional.
Max Lepchin, always a pleasure. Thanks for joining us.
Thank you.